more on currency. Isn't this more a sell than a hold?
We agree that the current macroeconomic environment is really challenging for the company. And Russia now is not in a good shape. But we suggest that this situation will improve in the future. There are some reasons for that actually already. And Magnit, the company, will succeed even in a challenging environment, and when it will become better, it will be even, we will consider even the opportunity to initiate the buy. But currently, of course, it is hold.
The growth in the revenues is because of growth in stores. Have you looked at same-store sales growth? And how does it compare with the peers?
Well, actually, in recent years, Magnit's expanding of selling space has been falling down. However, it's still very high because we cannot compare actually the sales growth of selling space of, for example, Lanta, which is 3 times smaller than Magnit. Magnit actually experienced a negative effect of high base, which doesn't allow to expand very, very fast in comparison to other smaller peers. However, taking into account Magnit size, it demonstrates very, very high selling space growth.
Do retailers in Russia own real estate, or do they lease?
Excuse me, is the Russian?
Do they own their stores, or do they lease the stores?
All the stores?
Sorry, working. It depends on the format of store. So here we can see the convenience formats, and we see on the third, at the right side, the third diagram. So we can see that the owned stores only 25%. Moving next, for example, we are going to the hypermarkets, and here the percentage of ownership is higher. Therefore, it depends on formats of the store.
It also varies company by company. So in case of Magnit, lots of stores are owned by the company, as you can see.
My question's tied to the upside and the rating. So with an expected return of 18.1%, including dividend, and that's rated as a hold, what type of returns would you require for a buy rating? I guess the question is, what would be a better return in current market conditions to elicit a buy?
Yes, it is really important. So we considered the required upside to initiate the buy recommendation as higher than cost of equity. Our cost of equity is approximately 18%. So we suggest that to initiate the buy, it should be significantly, well, just a few percent higher than the cost of equity of the company. It's a required rate of return for the investors. So we will see for this figure. In our case, it is lower, so our recommendation is hold.
Thank you.
And let me add something, just to know that in Russia, risk-free rate is 10.3% for like American T-bonds, and here we have an upside of 16 and total upside of 80.1. And in the recent period, just at the period we analyzed the company, we saw high level of volatility in the stock. We saw 9.2 thousand ruble per share to 1.8 thousand ruble per share. Therefore, market is very volatile, and that translates in very volatile stock. Therefore, we just can't give our potential investors the buy recommendation. It's a hold one. Thank you.
You mentioned Magnit's inclusion in indexes as a positive, but it works both ways. When passive investors sell, it's a negative. And my understanding is that they've been selling the Russian market for over a year. Is it true? That passive investors are selling Russia and selling the stock of Magnit as well?
However, it's of course was true. So the capital leave country, but however, today we saw a little positive dynamics. And however, you're absolutely correct. And on the stock chart here, we can see the high level of volatile volatility in the recent period, and one of the reason is the capital left from the country, and index funds sell the stock, and therefore price was jumping. So.
Yeah, and I would like to add that the inclusion in several indexes, not only Russian but from emerging markets, supports the stock, supports the company from the investor, which sometimes even do not want strongly to invest in Russia, maybe in Magnit, but anyway they have the stock in their portfolio, so it supports price of the company.
As long as investors buy the index, when they sell it, it doesn't support the price.
Yes, as long as they buy.
My question somewhat ties to that is, you mentioned some of the slowdowns are due to the U.S. sanctions. Did you model or run sensitivity analysis of what would potentially happen if they were removed?
Actually, the sanctions from the U.S. directly do not affect the Magnit, because it is not the company from the list of sanction list. So it's actually hard, therefore, to analyze the sensitivity and the opportunity for removing these sanctions for the company.
Okay, I want to add that our base case is that sanctions will not be removed in near future. Therefore, in fact, they will not be removed, and all our analysis cover this case.
You have a chart looking at the impact of oil prices, and Russia's meeting up with all the other oil-producing nations in Doha this weekend. What is the impact if oil is to go from WTI from about $41 to $60? What is the impact on your revenues and your profitability?
In fact, only 10% of Magnit products, Magnit buy only 10% of its products abroad. Therefore, the impact of oil prices and consequently exchange rate of ruble is not very important for the company.
But overall, of course, increase in oil costs and oil prices will lead to the increase in ruble exchange rate. Therefore, we expect lower inflation and slowing down in decline of the real wages among the Russian population. Consequently, it will support the buying power of the customers.
So a $10 increase in oil prices from here, what is the impact on revenues? Percentage.
In fact, for the company, it's important that the prices are stable. It's not important what is the level now. It's important that prices need to be stable to impact the company.
We read dreadful statistics about the demography of Russia, the health of the population. Did you factor that into your evaluation, or is it irrelevant?
In fact, for Russia and for Russian retail in particular, demography is not the key factor of growing, because today modern retail of Russia is only 62% of the market. Therefore, organic growth will continue because we can push out such formats as open markets and mom and pop shops.
Yeah, and moreover, the consolidation in the market is currently significantly lower than, for example, in Poland or Turkey. So we suggest that there are lots of opportunities in terms of growth for the company. We are now speaking mainly about the organic growth. So the figures about the declining Russian population are slowing very low. It is not so significant for our particular company.
Are there different metrics between the growth that they're seeing in urban versus in rural parts of the country?
The company opens their stores mostly in rural areas, small urban areas. So consequently, their growth there is significantly higher because they open lots of stores. So urban areas like big cities are growing slower for this company because it is part of the strategy of the company. Thank you.